Gold, matey. What's up? It is gold. It's gold, my friend. Quit calling me gold, member. Gold looking sexy. Like it always does. In a non sexy way, but sexy. Looks sexy on you, but not when you're on gold. Right here, we got the weekly chart of the gold is looking pretty tasty. Pretty tasty. Looks like we are right here at an inflection level that we need to break. So gold's at 1855 right now. We need to break above 1881. We break above 1881. More than likely, we're going to retest this $2,076 high again. And this is when I think it gets broken. We've had a clear, dead spot on double top. First one from August 3rd of 2020. A second top from March 7th of 2022. And now we're headed back up. We've had a nice little run since October 31st. Pretty massive candle in November, but we're creeping. We're creeping. We're above the 200. We're creeping back up towards that line. And the rule of three, that's you gotta consider it. One test, and we failed, but made a higher high than or higher low than the previous low. We barely retraced. Consolidation, tested it one more time, got knocked down, and the rejections aren't as bad as they should be. But in this economic environment like we're in, right now, gold's holding steady. If nothing else, you're holding steady. So if you really want to be nitpicky, okay, so let's say you bought gold in July of 2020. You're still at the same price. So you've held it for 2 years and made no return on your investment. But what you have done is managed to store your wealth, and that's what gold is for. It's a hedge against, they say, inflation, just because it doesn't get beat down like everything else. But right now, gold's kind of peaking that we're going to possibly retest this for the third time and make a run for it, and we can zoom way out. Well, let's see. We zoom way out and we see where gold has its ways. And if you look through all of these markets, I mean, it's just realistically in the long term, gold does that. That's why they call it a store of value or store of wealth. Is you'll have your little spikes, but it holds sideways in crazy markets. We have long sideways consolidations, but it likes to double test, dip, and then rip. So you can see multiple times, 1, 2, we dipped, and then big rip. If you can catch that rip is the key. And we've had double test here, consolidation, rip, double test, consolidation, rip. I mean, and these rips may look small in this time frame, but just put it in perspective real quick. I mean, that's 35% in one candle. Double top, dip, rip. And you can check that right there on, 176%-ish. It has its moments. And to me, I think it's setting up. Some people want to call it a cup and handle. And I can vibe with that. That to me, very cup with handle-ish. We didn't break down too far. We just came right back down to some consolidation levels and we're trying to rip again. That third test is usually when something's going to break. It's going to give way. We're building positive momentum on the MACD. I love that. We're in the bullish control zone on the RSI. Love that. Let's look at monthly gold. 3 beautiful months of an uptrend. And you really want to look, we got here lately what we've been getting 1, 2, 3, 4 months, small correction. 1, 2, 3, 4 months, consolidation. 1, 2, 3, 4 months, consolidation. I mean, we're at 3, so we could have a nasty rip to the upside this month and possibly get back up to test that, over $2,070 range real easy. Not to mention on the monthly, you got some really nice stuff going on with your MACD here. You're losing that negative momentum. Look, your MACD's trying to cross to the bullish upside. You gotta love that. So if you're in gold, very, 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 very good chance you're going to retest those highs. Look at silver real quick. Silver is really close. I mean, it's had a massive 4 months run. But silver's showing loss of negative momentum too. It's looking as good, if not better, than gold. And we've already had multiple tests here. You break $30 on silver, sky's the limit. Really, it could be. It could be. There's our, it's doing the same thing, but you got that cup and handle looking-ish, but we're going to go right up here. The $50 range for silver, that's not strong. That's just 2 candle wicks. That's not strong. So if you get through this hecticness at $30, it can blow right through there in a heartbeat. We'll look at the DXY real quick. Not well. Let's see. We'll look at the monthly. It's really cluttered right now. Not worth looking at. We can go out here to the weekly and see all these games we're playing with fib levels and all that. I mean, we're hanging in there. We're trying to lose some negative momentum, but we all know when the DXY goes down, stocks go up, vice versa. So the weekly, nothing to write home about yet, but you start getting on some smaller time frames and you start getting a little more vision about what it's doing. We're under the 0.5 fib level. We're fighting it, which also to be the 105 is a historic level of resistance and support. We get down to the 4 hour. You see we had a little triangle flaggish situation. It broke down, but it's still trying to find some legs. We gapped down, but it's trying to find legs. We may get a little more downside. Let's say we go back and test 103 again, 103.34 or something like that, and then turn and try to make another test of this fib level and get past it. I don't know. So I think stocks could be mixed, could be choppy. I wouldn't be looking for no just massive green week. Not going to happen. I don't know why everybody today when the Fed minutes come out wanted to act like that has something to do with it. We already know what the Fed said. Just because you saw it in writing versus live on a conversation, that's horseshit. I don't let that go. That's craziness. That was all hype to manipulate the market. Don't fall for it. We will look at the S&P. Let's start with let's look at the daily on the S&P consolidation. Here's where you gotta stop for a second and think. We're showing consolidation for the last couple weeks. Okay, we're losing negative momentum, trying to go neutral to positive. That's all looks good. That would insinuate more upside. We do have the 200 looming over us, so I don't know how massive a run you can have realistically, but then you zoom out and it doesn't look that great. High, lower high, lower high, lower high, lower high. It could be just consolidation before another breakdown to lower prices. We're just going to have to play it day by day. And I think what's going to help reiterate that theory and my theory and what I preach to everyone in my Discord, and it's something new I'm going to come up with. You don't want to try to find the needle in the haystack. That's not trading. What you want to do is shovel that hay like crazy while it's there to be shoveled. And if you run across a needle and it pricks you one time, take that prick. There you go. You found the needle. Get rid of it and get back to shoveling hay. That's all trading a trend is. You might get pricked once or twice with them needles, but that big pile of hay is sitting there to be shoveled. Right now, the big pile of hay is this bear market recession downtrend. So what if we get pricked one time? We live to fight another day. But if you look at the MACD on the weekly, not looking good at all. I mean, we're losing all of this positive momentum that we've been building for the last few weeks, and it's not. We're not sure. It's not positive. It's not good. That's just insinuating that we're about to turn and possibly retest this low or make lower lows. So the weekly is not great. Daily's not great. The monthly, it's got a long way to go. There's a lot of work to be done to get the monthly anywhere excitable for future upside. The 4 hour, it's just not enough to justify trying to change your mind. The 1 hour is even losing positive momentum. So really, we're still in a bear market, guys. So just hang in there. Keep buying puts, trading to the downside, and I'll let y'all know when we make that turn. The Dow Jones has been doing what it's supposed to do. It broke out of our descending broadening wedge. We have come back and back tested. So we had a back test of spring, which happened to coincide with our trend line and our 200 moving average. And what did we get out of it? What kind of upside did we get? No follow through price action whatsoever. Sideways consolidation looks more like a bear flag to me. We did make a higher high, but the momentum is waning severely. I don't see how any of this could be anything positive about it. Nothing looks great on that. More downside or choppiness is coming. The daily show, we could have a green day or two. I think it's just a matter of time before we start to see all these indices roll back over again and try to find a bottom. We get right back into Bitcoin. We're in the same boat. It's just following tech stocks. That's all you're doing right now. So if you're in Bitcoin, you've got to be patient. Hang in there. We've got to get down there and test that 12, 13 level. Got to. At some point, we're just closer to it than we're not. So why not go ahead and test it, show it as support, try and make upside. So I'm thinking we've got 5 or 6 months left of pretty nasty consolidation sideways before we see any glimmer of hope. We've had some crazy stuff, crazy little shit coins pop off, pump and dumps, if you call them. Congratulations. Most of them popped with no sign, strictly manipulation. But then we've had some real outperformers. Check out Starbucks on the weekly. What has Starbucks been doing since May 9th of 2022? Just ripping. Let's see what kind of craziness we got. 54% upside above the 200. That's pretty incredible. That Starbucks has been ripping. And the weekly is building positive momentum again. It's not really dying off. The daily, wow. Look at this. You talk about hidden bullish divergence going on right here. You've got higher levels of negative momentum with a low and a higher low. Right there is screaming upside. And right now we're coming back to where this double top was, testing that area, which was also some lows. And so Starbucks breaks 105. We could be off to the races to get up here in this choppy 109 area and then start looking into the teens, the 116s, 117s. If Starbucks can hang in there and produce, you might see some all-time highs on Starbucks at 126. So keep an eye on Starbucks. I like what it's doing. Let me give you one to short the living crap out of. How about that? You want to short something? I'm going to give you something to short. We'll get rid of this line. It's misleading. Microsoft. Now, any of you who might have heard a little news, which I suggest don't watch, they pushed for like a day and a half of, it's microchip stocks and tech stocks are so beaten up. Now they're pushing you for liquidity. That's what they're doing. Don't do it. Here's the weekly on Microsoft. Nothing but lower highs and lower lows. What do we got? Positive momentum is almost gone. We're still in the bearish control zone right here. Big, huge on the weekly. Bearish engulfing candle. Disgusting. Screaming, please short me. Go to the daily. Gap down on the daily. Negative momentum building again. Let's go to the 4 hour. Negative momentum building again. Still with your gap. It's just there's no buyers. There's no buyers for Microsoft right now. You get down to the hourly, and all it is consolidating in like some kind of little bear flag. So let's all be mindful to place puts and shorts against Microsoft. Where we're at now is showing that we're trying to hang on to this level of congestion. We got to the bottom of that level at one point, but here's my ultimate goal of where I think Microsoft is going to go, people. You're going to get a test of that, possibly that if it gets bad. 200 or 190. Those are your two. Those are ultimate targets that we probably need to see hit before the oscillators are reset in a way on a larger time frame that would give us any kind of pivot point or bullish sentiment. Flat out. That's a beautiful short if you want to take it. Meta, on the other hand, has took such a beating from its highs to its lows. I mean, we're at almost a 786. I mean, that's pretty nice. That's pretty nice right there on a dump from Meta, which gave us an area to bounce from. And what did we do? Bounce, big bullish engulfing candle back up to the 112 level. Consolidation, big candle again, but then we had a very nice flag, and it looks even better on the 4 hour. Look at this. We had, it's say, symmetrical triangle, little flag, whatever you want to call it, however you want to measure it. But I measured it as a symmetrical triangle. The 100% measured move puts us at 138 from the breakout. And so far, what did we do? We broke out, sprung, back tested the spring with followed through price action. We're seeing everything we need to see for Meta to get back to 138. Once that happens, there's going to be a lot of choppiness right there. But this was posted in Discord as a trade alert several days ago, and it has paid handsomely. On this breakout, back test, and follow through price action, we took a call option, and it's paying off big time. Every time scale is showing positive momentum building. Meta may, it was one of the leaders that got beat down and crushed first. Meta also was one that went way further down than people thought, and it's time for a relief rally, and that could last for weeks and months. We don't know, but we're going to play it as long as the charts are telling us to. Tesla's another one. Tesla has been beaten into oblivion with everything else. Nothing Elon did. That's horseshit. Don't play that narrative. Elon didn't cause this. The markets caused this. Everyone is lost. There's no shining stars in tech. They're crap. But what do? We come straight down to our 786 fib level, and we bounced, and we're holding it right now. We're still showing negative momentum is my downside. We're losing negative here, trying to go positive on the daily. The 4 hour has turned, but not a lot has came from it. You can even get down into the hourly. We're just, even though we're showing positive momentum, there's not a lot of buyers right now. So, with that being said, Tesla's another one that I think has to get down to the ultimate level before anyone other than Kathy Woods feels like it's a buy, because she is buying every day. And I just don't, I don't like that kind of strategy, but she's a professional, I'm just little old me. if we're going to see a lower low, it's going to be $94 on Tesla. $94 coming soon. The ultimate level that we're really shooting for that would make the most sense is somewhere in the $67 to $63 range. That hits an 886 retrace and would be everything would line up at that point to bounce. Tesla could see $67, y'all. So short it down there. When it hits 67, all you can do is go long at that point and see what the indicators are showing us at that time. All right, so those are kind of my rants and my raves and the ones that I've just really been pounding on. Some alerts. If there's anything you wanted to see, please post it in the comments, and I'll try and put it on the next stream. The next morning watch list will be out in the morning about 8:15. And I want to appreciate everybody who watches my streams and or Discord members. So please, it will be in the description. Sign up to the Discord at 7-day free trial, $5 a month after that. You're going to make your money back in the free trial. You're going to pay for a year's membership on your free trial. Your 7 days, you're going to crush it. So thanks everybody. Like, subscribe, tick the little bell to get notified when I go live or post watch list every morning. And I will see y'all later.